Are you thinking about buying or selling a home or are a real estate professional and want to keep up with the most recent Twin Cities stats, trends, happenings, and news? Well, come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show. Make sure you check us out online at TwinCitiesRealEstateShow.com. There you can see our past shows as well as download our free home buyer and seller guides, our BRIX report, all sorts of great information there, TwinCitiesRealEstateShow.com. If you have any show suggestions, you can submit them there as well. I'd like to welcome Chad, Libby. Thanks for coming back.
Yeah, thanks for having me.
Good to see you guys. Good to be back.
Today, we're going to, next segment, deep dive into pricing a home. And I don't know if there's a great consensus across the real estate community of what it would be the best way to do it.
I think it depends on the market.
Yeah, but I think we're going to hit on some high points and some things to avoid because there's definitely ways not to price a house.
Absolutely.
Yes.
Right?
Yeah.
So it's a good conversation. I think good for obviously home sellers, but buyers as well, right? How are you verifying that, what you think or what an agent might be telling you is actually the case? Because one of the worst things that can happen, and I think we were discussing this before the show, is there's a lot of people who purchased in 2021 and 2022 that are hurting right now because they didn't take the time to verify the real value of a house. The real value of a house, if you're considering, hey, I need to sell this in a year, I need to sell this in 2 years, isn't what the house is worth that particular day in a multiple offer situation. It's looking at what's the safe value range you can go in, get this house, and not end up upside down. Right?
Huge.
Now, obviously, for sellers, you want to figure out when that peak market is.
Absolutely.
and hit that. So, hopefully this topic is found well upon people. But I want to talk a bit about the market. I know the last show we talked about past peak tactics.
Yep.
Still get conversations. Oh, I don't want to miss the peak on the market. Yeah, that happened 2 months ago.
Right.
Yep.
Right.
Yep.
Too
We
late.
are past that point.
We are,
for
yeah.
now.
So now, does that mean we're in a bad market? No, not at all. But we are seeing listings moving up. Pending sales are still tracking behind, though, the new listings. That said, the activity from 2 months ago has actually put us kind of in this inverted point. We are under last year's inventory. It'll be really interesting to see what happens over the course of the next 3 weeks. As we're recording this, it's the week after Memorial Weekend. So, I think we'll have a real good idea of where inventory is going to stand probably by mid-June.
I agree. And I think with a little bit of rate improvement, we're really going to see some
Why does it keep going the
That's
opposite
what I was
way?
just going to say. Those buyers are watching those rates, and that might be part of it too. The sellers are also maybe
I agree.
timing it. Yeah.
It is totally a factor, one of the biggest factors right now in anybody's mind.
Yeah, the couple days before Memorial Weekend, we were approaching 7%.
Correct. Yeah, and we've all heard the debt ceiling debate. That's the big one. It's holding a lot of risk in the markets. And from what I read this morning, it sounds like they're trying to come up with a deal by tomorrow.
Yeah, and I think we've all been talking how if that deal comes, it should help bring rates down. But the other part, though, is okay. Maybe that cures for a quarter or a half, but every economic report has been positive for looking good for interest rates, right? So,
Right.
the economy is slowing or jobless, and then the next one, it's the opposite, right? It's the
It's
EKG.
all in what you want to decide to read. I mean, everybody's
Yeah.
got a different opinion, and some of that, where's the real data?
Exactly.
Carving out the information.
It's interesting out there. We as human beings are so dialed into the interest rate, and it's very important. And I talk to people about this all the time, is that if you're ready to buy, you buy, okay? And there's ways to combat that interest by paying additional monies per month to the principal if that's your goal. But, we are in a higher interest rate market. It is what it is. There's tools out there to help you with that, whether you're buying your rate down or whatever the case is. But you mentioned it, Kirk. Once we get the debt ceiling taken care of, what's next, right?
Right.
You know, it's very stressful, and it's like, okay, I scratch my head a lot, and you know, the economic.
Well, I mean, it's going to take the Fed saying, I think, ultimately,
Well, and
like, oh, we're going to stop increasing rates. We're going
Yeah.
to start reducing, and
that's gonna
it's
turn
also
it
all
on.
relative, right? Where are we at? 6.8 today.
Yeah.
It's all relative. Where
Right.
were we back in the 80s? 18%.
Yeah.
I mean, it's all about what we're used to. And I have a lot of younger buyers who are, they thought that maybe 3% was relatively normal. No, that was
No,
historically
no. Yes.
good.
Yeah.
And what did that create? 2020, 2021, it created this frenzy and panic where everybody wanted to lock in on a low rate, and they were skipping an inspection, and they were ending up in situations where all of a sudden they're not in the greatest position now, and they overpaid.
Yeah.
And
Right.
they
you traded rate for a high price. on a
absolutely,
house.
and
Yes.
now they are locked into that high price. I'm shopping with buyers now, and I'm explaining to them, it was just Memorial Day weekend. 2 buyers under contract, wonderful, great timing, slightly elevated rate, maybe.
Yeah.
That can be readdressed in another year or 2 years.
Exactly.
You can never change the price that you pay.
Absolutely.
Exactly.
Right. So you can change your rate. That's for sure.
Yep.
Yeah. So showings per listing per week average. We go back to April 9th. That was the peak at an 8.55. We're now down to a 5.32. Right. So that's part of the reason you're experiencing that. Oh, this is a lot easier for the buyers
Great
out there.
opportunity for buyers. Right?
Yeah, we talked about rates approaching 7, but there's a possibility we can hopefully see some improvement there. Market meter. This is an important one, and this is where the pace of the market out there. So going back again to that peak time, we were at a 10.16. We're same right around that beginning of April, mid-April.
Okay.
Now down to an 8.53. Still in a strong seller's market range. So don't get me wrong on that. But it is slowing, and I think we probably, if history proves itself correct again, we'll see this market meter hit stable market range by 4th of July.
That'd be great,
Yeah.
actually.
Yep.
Give us some
absolutely.
relief for our buyers
Balance.
and sellers,
Well,
obviously. and
this
Balance
could
is
create an interesting scenario where if we see stable market by 4th of July combined with a rate drop, that will then have just a flurry, I think,
I think
buyers
so,
that will
too.
be like, yep,
Yeah.
now.
Right.
I think
Right.
if we get down into the high 5s, it's going to create just another
Oh.
rush, another frenzy
Yeah.
of huge buyer activity.
I
And
agree.
again, competing, dropping inspections, all the things that people do to win.
Yeah.
Yeah, because going from the upper 6s down to the mid 5s, I mean, you're talking a couple $100 or more a month on your payment.
Yeah.
That's huge.
That makes a
is.
big difference.
Yeah.
So, for buyers, actually, before the craziness hits, take advantage of this window that's out there. When we come back from commercial break, we're going to get into that pricing a home, right? How do you know when a house is priced too high, right? And you're being told, oh, make an offer, go to this or whatever. How do you figure that out? And for sellers, what is the reasonable price, So many great data points on pricing home correctly. Again, check us out online, TwinCitiesRealEstateShow.com. There you can get our Smart Home Buyer, Smart Seller Guide. We'll be right back. Kirk Duckwall here again with the Twin Cities Real Estate Show. Our local sponsors are BRIX Real Estate, Network Title, Eric Bloomstrand and Chad Priebe with Bell Bank Mortgage, and James Tufson with the Preserve Group.
When shopping for a mortgage, there is a formula to get the best rate. With the market today, knowing this formula is more important than ever. My name is Chad Priebe with Bell Bank Mortgage. I have over 20 years experience in the mortgage industry and in home buying education. I'd like to share this useful tool with you to help you shop for your mortgage. You can find me at chadpriebe.com or call me at 651-207-9274.
Hello, my name is James Topson with the Preserve Group. Anyone can sell you insurance. However, is it going to be the insurance you need? When life surprises pop up, you want the right coverage. When it comes time to find or renew your policy, give me a call. I would love to review your existing policy and show you what I can do for you. You can email me at james@mypreservegroup.com or give me a call at 651-728-4334.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
People always ask realtors, what is your commission? But what they should be asking is, what is your rate of return? Commissions only vary by a couple of percent from agent to agent. However, the price per square foot you get just based on their experience and the quality of marketing they use can vary by 10% or more. At BRIX Real Estate, our agents use the right marketing and have the experience to get you top dollar for your house. See what we can do for you at BRIXTwinCities.com. Welcome back to the Twin Cities Real Estate Show. Check us out online, TwinCitiesRealEstateShow.com. There you can see all of our past shows, as well as download our free guides along with the BRIX Report. If you don't know what the BRIX Report is, go to TwinCitiesRealEstateShow.com. Check it out. It covers lots of great information about where the Twin Cities market was, where it looks like it's going, things to consider when buying or selling, along with some other cool info about things to do around the Twin Cities. If you're new to the Twin Cities area, it's a great publication to check out. Again, it's free, TwinCitiesRealEstateShow.com. All right, we are talking about, in this segment, pricing a home, strategies for that, things to avoid when pricing a home, misconceptions about pricing a house, right? A lot of those. Mm-hmm. So I want to kind of touch on the things to avoid. Right. Well, my neighbor's house sold for.
Hear that a lot.
Neighbor's house, right? Well, why do people immediately go to the neighbor's house? Well, because it's next door.
Local, for sure. Yeah,
but
sense.
Just the same as a Corvette can be on the same car lot as a pickup truck does not put them in the same category. Yeah. Okay, now location is obviously an important factor when talking about the land, but it's not when factoring the house, right? As far as the house structure itself. You want to really try to compare apples to apples, right? And if your neighbor's house is a story and a half, you're a rambler, throw it out as a comp, right? I am not going to use that unless I absolutely have to, right? And then we're looking at how many square feet is it above ground, right?
Above ground, big one.
Above ground,
yep.
Right? Right? What's the footprint size? How much elbow room do you have, right? What's the age? Then what are the updates that may be in that house, right? All these things are getting factored into that.
Absolutely. Sometimes you can have a floor plan, which it's a tricky one to cure if you've got a bad floor plan. 3-bedroom even compared to another 3-bedroom, but
or a 3-bedroom, one's down, one's on the main, one's up.
It's exactly not desirable. Whereas 3 on one floor, much more appealing to most buyers.
Right.
So, different.
Yep. So you got to make sure you're trying to compare apples to apples. So don't just immediately. Now, there are some you go to Roseville or Richfield where it's all 1950s ramblers running up and down the street. Your odds that your neighbors, it's going to be a little closer.
Close on value,
pretty close.
Yeah.
Right. Yeah. Or townhouses, right? That can be one. But then you have things that we're going to talk about like time of year of the sale, all of that, right? Terms of the sale. And what do I mean by this? Well, was it something where sold before print, sold to a relative? Like, how did that take place? So don't just immediately jump to, well, my neighbor's house sold for this, so this means I'm worth this. No, that's not a good
not
format.
Not necessarily relevant, for sure.
It's kind of like interest rates. I hear that a lot. Sorry to interrupt you. my friend at work got this, and why is mine that?
Yeah.
You know, you know what I mean?
yes.
That's a good
or my
comparison.
aunt got
Well,
this interest rate.
your credit score is 615 and theirs is 750.
Right, right, yeah, right. To your
Different
point, though.
factors.
To your point, there's a lot of factors that go into that.
For
so.
sure.
Yeah. Oh, it makes complete sense.
What about the Zestimate?
The Zestimate, yes. You
I
know,
get that question a
I
lot.
when doing a market analysis, will print the Zestimate off every time.
Mm-hmm.
And
Okay.
I'm going to say, hey, I understand that everybody looks at these, right? Do I look at them? Yes. It is a data point, but it's one data point.
Mm-hmm.
And what's really important to understand is the Zestimate number that it gives, $358,500. First of all, if we're talking about, especially for buyers, if you're looking at a home that just was listed, that Zestimate changes
Yeah.
to be much closer to wherever the list price ends up being. So don't just assume that that's correct on a listed home. Then, when talking about off-market properties, in the Minneapolis-St. Paul area, the Zestimate is within 5%, only 45% of the time, as far as that dead-on number, right?
Less than half.
Yeah,
time.
less than half. I mean, the weatherman has better odds than that. So an off-market property, you got to make sure that you're looking at that piece. But the range that it gives tends to be correct
Yeah.
a lot more often.
Those algorithms
Yes.
have improved over
Yes.
in more recent years.
So if it says you're 300 to 400 and the Zestimate is 350, well, the 3 to 400 is probably giving the correct range, right?
Which is
$100,000 swing.
But you see those.
you and
really do.
everybody else.
Right,
I mean,
right,
that's
right.
a big window.
Right.
Yeah.
And if they're at a 3-star on the Zestimate or confidence level or whatnot, you gotta see, and you kind of get that based on how big or small is that range. But their range tends to be a lot more accurate.
Not a reliable tool, though,
Yeah.
for determining your value.
And before the Zestimate came along, this is one I'd hear a lot, which is, oh, the tax value is this.
Right. Yep.
The
How
argument
much
I
do they need to
always-
put it at to get the amount of taxes they want out of you? That is,
Well, and I always
Yeah.
explain to my clients, buyers or sellers, the tax value. That's an interesting number to look at. Nobody's ever going to go to their tax assessor and say, "No, mine's worth more," because
Yeah.
it
Whoa.
equates to you paying
No,
more
more tax,
taxes.
yes.
Nobody ever argues their assessed value
Right.
to be higher.
Right.
That's just
Although most counties now have increased their
The
Yes.
market's been
Yes.
up in the past few
I
years.
mean, I think ours went up like
Fair enough,
18%. But
well, ours went up and then back down slightly over 2022.
Yep.
Okay.
I've
Yeah.
been seeing that too on a lot of properties.
So, I mean, again, this is an inaccurate, but a data point. Is it something I look at? Yep,
Yep.
it is.
Consideration.
I get this a lot. Should I go out and hire an appraiser? And 90% of the time, 95% of the time, my answer is going to be no, because an appraiser's job is to evaluate risk for a bank.
Yeah.
Right? We submit our purchase agreements to appraisers to then decide if that value is good or not, right? As far as is it within that risk bubble that they're
Threshold.
willing to do. And we even see appraisal waivers on situations, right? So, I would, and plus, you're going to pay $600 for an appraisal.
But you don't need to.
Yeah.
Don't do that.
Find a good full-time real estate agent
Interview a
knows,
couple.
yep, and then that knows how to do a really good market analysis. I know I'm methodical about it. I'm not changing my process each time, right?
No.
I have my primary method of doing it, and then I have a secondary for those really more unique properties, right? Where it's almost more like building the comp is the best way to put it. But you want to make sure somebody really knows how to evaluate. Just because they're selling homes in your neighborhood does not necessarily mean they're the person that knows the best way to price, right? A lot of people, oh, yeah, this person sells a lot of homes. Well, did they sell 3 homes in the neighborhood, and that's the only 3 homes that they sold all year?
Right. And
Right?
what was the price they got for the home? Did they do a good job?
Right.
Did they net the seller the most profit they can get, right?
Well, and this is a common thing is you know, a lot of people think a real estate agent's job is just to sell the house. My dog can sell a house. That takes no
That's
skill.
impressive.
Well, you put them out there with a for sale sign and put a really low price on the house.
Yeah.
Yeah.
Right here,
Yeah.
there's realtor hanging. No, I'm just kidding.
Well, and that's where it's important. I think it's good for any seller to interview a couple of agents
Yes.
and get
Yeah.
feedback. And, you know, everybody's style is different. I probably have a different set of clients than you have. And that's,
Right.
you know, all of those pieces. But I bet we'd probably come in relatively close on where we think value would be.
Yeah.
And that's the piece that they can walk away seeing a consistent theme or not. And it's not necessarily going to be the agent who shows you the highest number that
Right,
you
that's-
want or need to hire. That's
Yeah,
not
that's a
necessarily
really
where
good
it's going to
point.
go.
Yeah.
Yeah, you want to know who's going to provide you the best marketing and the best service, timely communication, and you know the goal is to net you the most, right?
Right.
Which
Net you the
requires
most with
solid-
typically the lowest amount of stress. Now, some people, their stress tolerance of, hey, I'm willing to do some extra things to get it ready versus others, but ultimately it's netting you the most to fit within what you want to do to get ready, right?
a solid
And
strategy, which has a lot to do with where are we at in the market, you know, and what time of year is it, and what,
Right.
you know, looking at what our statistics are, you know, what are the best window to sell in the spring, isn't it the last 2 weeks of March typically? We had a really long winter this year.
Yeah, so then
it's
ended up
like,
being a few weeks
let's go into
later.
April.
Right.
Yeah.
Yeah.
So it's
Right.
all about knowing that whoever you do choose to work with has their finger on the pulse of the market.
Yeah, talking about that, if you want to see how our market moves up and down annually really well, I think we have Lauren, right? We're linked up Market Meter right to the TwinCitiesRealEstateShow.com. Click on Market Meter, you can see it right there. I update that every week. I enter in where we're currently at, and you can see, oh, this is how the market's moving. If you wait for the data to come out from the association, you're going to be weeks, if not months, behind.
Yeah.
You know, especially if you're looking at closed sales data.
And it's obviously valid and
It's-
quality
yes.
information and
Right.
data, but it's also telling you what happened a month ago.
Right.
You know,
Right.
these houses went on the market 6 weeks ago and just closed, you know, a week or so
Just
ago.
watch the news
Right.
So,
news cycle, right? You watch a news cycle, whatever station you're on, 4, 5, 11, 9, whatever, right? The stories are about to come out. Wow, we're at the highest sale prices we've seen all year.
Right.
No, that happened at the end of March, beginning of April.
Yep.
They are just closing.
They're looking
now,
at closed transactions.
right?
Yep.
So make sure you have somebody that's qualified to figure that out. Okay, so if tax isn't great, if Zestimate isn't great, if appraisal is not the way to go, what is the approach, the method, right? So let's talk about what is a comparable property. We touched on that at the beginning. A comparable property is similar location,
Yep.
similar style. So Rambler, story and a half, split, 2-story,
different animal.
right?
Right.
Figure that out. Similar age, plus minus 10 years, right? Similar size. If one house is a walkout versus not a walkout, can you make adjustments? Yep. But if you can find one that is, it's better.
Right.
House on a busy road versus a not busy road, right? These are all things that you want to factor in, right? You go a block off of a busy road onto a not as busy, that's a $20,000-ish or more differential. Even if you found same house, the same house.
exact house.
Totally. And
Yep.
it's much more desirable on the resale end, which is how I'm always trying to position my buyer's mind to be looking at every property. Someday you're going to sell this, and this is something you cannot change about it.
Yes.
And so do you want to keep looking? You know, are we going to be patient
Right.
and wait for something a little, you know, further in, closer
Right.
to a park, whatever?
So do you think Libby is just trying to sell you a home? No. Right? No, I'm serious.
I'm trying to help my
I
clients
love that
find
you said that.
the right
That's
home.
a big deal, right? Okay, we're not just buying a house to fulfill our need of buying a house. What's the resale value on this house?
Absolutely.
Well, it's one of the
Okay.
biggest financial
Estate
commitments
planning.
most people
Huge.
ever make. The
Yes.
only other one that's probably similar is saving for retirement. And with saving for retirement, it's a plan, it's a strategy. You're looking at values, you're figuring that all out.
Yes.
Put the same amount of effort, right?
Yes, absolutely.
Into planning for right, retirement as you're putting into planning for buying a home.
And that's what we do too on the sell end.
Right.
When I meet with my sellers, we're looking at things in a very pragmatic way to some degree. And, you're doing almost a mini appraisal with that market analysis. We're looking at the square footage, bedroom count, bathroom count, fireplace, all those things, the garage stalls. If there's no garage, that again is a kind of a big defect here in Minnesota. And then the location area. From there, once you determine the price, I always make it abundantly clear to my sellers that you set the price. I give you the information. I'm going to give you the guidance, and you decide what this price is. What I would suggest is this range or what have you. I've gone also, I notice a lot of agents end in like the nines, 119.9 or whatever. I have gone completely away from that in my suggestions to my clients. I understand the psychology behind that, the value, but it's not, 100 and whatever.
I get it.
The other thing that I've come to realize, if you price a house at $299.9, and I have 4 buyers set up on a search, and they're qualified, in about the 300 to 350 range. I'm setting that search up from 300 to 350.
Right. $299.9 isn't showing up.
Not even showing up. And here they could have easily qualified to purchase it. So I've personally, and you want to, of course, make sure you're pricing it enough at the right price, not too low. I had a listing this spring. We actually just closed a couple weeks ago, and my clients had gone in and done a lot of rehab. It was a home that they really loved. It was a very emotional sale.
Okay.
And they wanted to bring it up to the level they always wanted it to be, the 18 years that they lived there. And Mrs. Seller thought it was about $315. Mr. Seller thought it was about $320. And by the time that we had it staged and ready to go, it's like, you guys got to go at least $325. And I kind of liked that round number too. We had and it was a little eclectic in style. So we weren't quite sure where it was going to fall. We sincerely, the numbers, everything, this felt like a good price.
Yeah.
We closed at $385. We had 28
Wait,
offers.
did you say 385?
$385. We had 28
Congratulations.
offers, and it wasn't an intentional, bidding
Right.
war we were trying to incite. We were sincerely looking at the data. They had a really beautiful home, and the way that they had maintained it, Mr. Seller was extremely handy. It was a great outcome for them, and even I was like, wow. But again, that first, bit of April, it was like the buyers were in full.
Do you think, had you priced it at you said 385? Mm-hmm. Do you think at 385 you would have gotten 385?
I think we would have sat. I think it would have gotten tires kicked. After seeing the outcome, and again, we were watching the market meter, the activity, and things were ticking up. They were going to be thrilled with a 350,
right.
but the outcome was resoundingly, more appealing than we anticipated, and it was original kitchen. It was a beautiful craftsman, and again, very well maintained. So sometimes those things don't necessarily, quantify in our data.
Right.
It's the buyer, how it appeals to the buyer.
Right.
And they gave us the answer.
Well, and you brought up what I think is a wonderful point, right? We can give our price. We can have a seller pick a price, from our advice of analyzing it. But at the end of the day, who actually sets the price? It's the buyer.
Yeah.
Right? The buyer's out there. And I've had somebody say to me, well, no, if I don't get this, then I'm just not going to sell. And I'll say, okay, then what we've established is you have a home without an established value. Right? Because until you have a viable buyer that's willing to pay it and that can close on it, you don't have that.
Right.
And that's why one of the stats that's very interesting, it doesn't hurt to just try this price. The statistical data says otherwise. A home that has to do a price change because they overshot on average will sell on a price per square foot basis of 4 to 6% less than the home that priced appropriate out of the gate to drive activity and get a viable buyer in that door. So this is where strategy, marketing of your real estate agent, not just setting it at the highest, right? And it's not just the one, well, why won't I just price my house low and it'll just go up to whatever? Nope. Buyers, their agents, they're going to want to see, oh, yeah, this looks like a good value, but they also want to see that it looks good online. They want to see that, getting the most people in the door, the right marketing, the right comments, all of it. All these pieces of the pie come together.
The right strategy, the right plan in
Yes.
that specific listing.
Yep.
You know, doing a brief coming soon period. I usually do like a
Yeah.
Sunday afternoon, and then we go live by Thursday or Friday, depending on the activity. And then, you know, there's certainly like a formula to it, but it has to do with the time of year and the activity. I just looked at one for my clients who they had a like 3-week coming soon period, and my buyer's like, you know, we'll probably lose sight of that in about 2 weeks.
3
Yeah.
weeks we
And it
want to
could be
buy.
too long.
Yeah.
A little too far.
It
So
becomes stale.
getting really dialed in on that.
So on the comps, size, age, condition, all of that. That's what you need. What I try to do, my personal strategy, is I look for one that's high. Nope, we're never going to get this much. Look for one that's low. We're definitely going to get this much. And one that's probably in the middle. Now, sometimes I've gone as far as I did one last week. I had 6. We were slowly narrowing in
That's
on that range, a little more unique. So it's nice to bring in some more properties to hone in on that range. But the idea there is one, it sets a nice bar. You're not going to get below this, like unless something absolutely crazy economy-wise were to happen.
Right.
We know we should be able to blow this out of the water. But it also sets a reasonable, and I always will talk to my clients like, do you think this house that we're looking at here is superior? One, I mean, it's bigger size. One, it has these updates, right? It's really hard to deny that. And it sets a threshold of reasonable range to go there. One of the things that I see where the waters get muddied in pricing a home is when an agent tries to do what I call a forced comp. This is where they're taking a house like, oh, I'm going to go a mile and a half away to find the same style. Nope, I said style was important, but not that important, right? Or, oh, this one has the fireplace, so I'm stretching to get that fireplace. Or I'm doing every knob and adjustment almost to make my seller happy. Oh, well, you have this, but in the other, most houses it's, you have this, they have this.
Yep.
You have this, but they have this, right? They weigh each other out. You have a 2-car and the fireplace. They have a 3-car and a walk, right? It's whatever it might be, you're seeing these things. I try to limit my adjustments to just have the houses be as similar as possible that I'm using for comps, so I don't have to do much of that.
And like you said, within a close proximity,
Right.
because a mile and a half away might be a completely different neighborhood. And I try to think of it as, would my buyer be shopping in both neighborhoods?
Yeah.
And that's what kind of,
Well, and you can run into an appraisal issue too if you're using that mile and a half away comp.
I had one
you
over
know,
on Brim Hall in St. Paul, I think Brim Hall is one of the ones that runs north-south there,
Yep.
right? And they showed me some of the other agents' CMAs, and one of them had comps all the way over by Cleveland and...
so they cross Snelling and.
all the way.
Gotta watch those
different-
major
all the way.
arteries.
Completely
Different
changed.
world
Yeah.
on the other
Yep.
side,
Different
right?
age, different area.
Yeah.
Yeah.
Right? Everything was different there. So you really want to make sure you're using solid comparables. Last thing I really want to touch on is time of year. You kind of mentioned this, but this is where I do like to make more adjustments because we have that market meter data. It's really easy to go, the market was here at this velocity, and now we're here, right? We can make those adjustments in activity, go back, see what sale prices were at, what did they go to, enter that. It's a simple calculation to put in,
Yeah.
right?
Right.
And they tend to hold very, very true. So you want to make sure you're pricing for time of year. If you come to me in September and look at the home that's sold in April and say, well, that's what I want, that's what we should list at. No, you need to make the adjustments. You need to get that appropriate for the time of year that you're coming into the market.
Right.
And there are utilizing the information coming out of the market meter to plan the right week to list, right?
Never on a holiday weekend.
Never on a holiday weekend.
I mean, I
right?
loved it this last weekend for my buyers.
Right.
But
Yeah.
don't get me wrong.
Yeah.
But that's not what I want for my seller.
Exactly. And paying attention to weather. Right?
Yeah.
Snowstorm.
we ran
If
into a lot of that.
you're ready to go on to market and it looks like there's going to be a snowstorm, wait another week.
Pump the brakes. Yeah.
Well, because it can
It's not
cost you
gonna-
4 to 6% if you have to lower your price.
Yep.
Right? I mean, at least.
Well, because buyers start getting this perception that, oh, what's wrong with the property? In this
Yeah.
market, if you're on the market, for a week or 2 weeks.
Oh,
it's
yeah.
like,
That's it.
Oh, what's
It's
wrong?
the kiss of
usually
death.
the price.
You
Yeah.
must have water in the basement, or something.
Yeah. What's wrong with it? Ask. I mean, if you're a seller out there looking to buy, think to yourself, what do you think when you see a house that's on 3-4+ weeks? Again, different markets, different price points. You go to the condo market, they're seeing 60, 80-day timelines,
Yep.
right? That's more
It's
normal.
a different animal.
But again, when you're doing a market analysis, that's something you're looking at too. What is the normal days on market?
Right.
And plan appropriately. But at the end of the day, pricing strategy. Right now, I know this is the last show we talked about was, our market is slowing down. That doesn't mean prices are collapsing or
Right.
anything, but the activity levels are slowing as far as the average number of showings per listing, right? That's slowing down. Not as many people coming through the house. That you do not want to price high because then you're going to be trying to chase, right? Well, what's the price drop that gets us into there, right?
Right.
I'll tell you this, if you're on the market right now and you're high, be more aggressive than you expect on your price reduction
Yep.
because then you might get ahead of it.
Just
You,
get
yep,
it, get
you
ahead
could
of it.
potentially still drum up that multiple if
Yep.
you correct quickly and do the right
and
strategy.
I've seen
on
that happen,
Yeah.
right?
Yeah.
My brain's been moving a little bit. I just want to throw this out there. So I was just thinking, like, if you're a for sale by owner, or if you're in the mindset that you're not going to pay a realtor top dollar because you're just not going to do that. Realtors make too much money. Well, the numbers that you just explained, the percentages, and when we're talking hundreds of thousands of dollars, you can go ahead and list your house on your own. For sale by owner, or you can go to a discount broker and get your discount, and you're going to find out you lose 4 to 6%
Well,
on
that's
that
just
already.
that's just one issue. Right,
Right.
now I'm writing a new course
Right.
called, it's, improving outcomes with data, right?
Yes.
Improving client outcomes with data. And if you look at each one of those data points, everything, it's a couple percent here, a couple percent there, we know that homes that are poorly marketed, poorly priced, can be up to 14% off.
Wow.
And I actually got into a little. It began as a heated discussion with another realtor listener on the show.
Okay.
And he called in and was saying that, well, how is it that you can get 9 to 14% differential? We started talking. I'm like, well, okay, so you're using professional photography, right? And you're doing these things. Like, okay, you're not going to be the one that's 9 to 14% differential,
Correct.
right? Where it's that bad. But you get somebody who's coming in there that a cousin Eddie taking the pictures themselves,
Eddie.
or using the pictures you've taken throughout the years and using those as your MLS photos. You have 3 or 4 up there. You overprice it. You don't stage it. You don't take the time to do the prep work. I mean, I just walked through one in Bloomington. Exact same thing. I'm like, wow, you could polish this house for very little time, very little money. It would have been sold, and it would have sold for more than they're currently at, and they're still sitting on the market today.
Yep.
So, a true professional is going to be able to guide you through each one of those points.
Exactly.
I had one. It was a for sale by owner. I was repping the buyer. Just slaughtered him on negotiations.
Yeah.
It's a beautiful house, great
Yep.
location. He had no idea what he was doing.
Yep.
And
it's
that's the
only-
person that doesn't want to pay the realtor.
Right.
Or,
Oh, yeah.
Oh,
Right.
oh.
And I mean, more power to them because you never know what their background could be.
That's true. That's true.
That being said, it's only the single largest investment most of us make. Outside of your
Right.
retirement plan, it's worthy of at least a consultation.
Yeah.
A lot of people hire retirement planners or have an investment advisor, right? That they take the time to do this. When you figure it out, okay, you're still usually almost always doing a buyer payout. Don't ever skimp on that. The amount of money that you're going to lose is around 7% for just a slight differential in buyer payout because of the number of showings is going to be reduced by a lot.
Well, you know it, right? Yeah.
That's crazy.
Yeah.
But, so you look at a 2.73% payout, and then you do it yourself, that what are you saving? Somewhere, if you're hiring an attorney to do your docs
Right.
for you, which usually they do, a for sale by owner does do that. So now you're going to pay around 1% or so to that attorney. So now you're
Not
saving
too far off, really.
2%. But if any of those other pieces of pie are messed up, you're going to be net negative. And the data shows that most of the time for sale by owners, average, it's a net negative.
Well, and I just think about my almost decade-long career and how much I've learned in that time, and how I feel like I'm confident in my ability to handle multiple offers and how to field that and how to negotiate and how to present that.
Right.
And just the overwhelming process that it can be, even when I was learning 4 or 5 years ago about, as it increased. And so that's something that, boy, I wouldn't, now that I know what I know, I wouldn't
Exactly.
want anyone to be.
I wouldn't have hired me when I started.
Well, I have a gentleman.
I wasn't saying that, but yeah, okay.
Oh, that was funny. That was good. I have a gentleman for sale by owner, very smart guy, right? And comes down to closing, there's open permits. He forgot he did a water heater like 10 years ago. Anyways, it took 7 days to get that permit cleared.
Oh, boy.
Buyer's rate was expiring.
Oh, no.
The seller had to pay at their expense to extend that rate. It was close to $900, right? And it was as simple as an open permit he forgot to close. So it's just things like
Details,
that
they
where
add up.
if you have a professional agent, they have a professional title company they work for that does all that work up front for you.
Well, I think you fill it in professional agent.
Correct.
Professional agent. There are a lot of not so professional agents. So take your time, do your due diligence, interview a few people is a good idea.
Yep.
Well, I think wrap it up there.
Yeah,
Super.
good information,
All right, well,
guys.
thanks for coming in.
Thank you.
Appreciate it. And see everybody in a couple weeks. Don't forget to check us out online anytime at TwinCitiesRealEstateShow.com. There you can find all of our past shows, our weekly market updates, along with the latest and greatest searching and researching tools, and our free publications to include the Smart Home Buyer Guide and the Smart Seller Guide, along with the BRIX Report. All of these free for you. If you have any real estate questions, please feel free to give us a call, 651-303-0019. Again, 651-303-0019. Happy to help answer any of your real estate questions or assist with your real estate needs.